Hello everybody. Welcome back for another video. Hope you're all doing well. Hope you're all doing great. Hope you're all having a great, fantastic day. And that you're all doing well. Don't forget to like the video. It is a free and easy way to support the channel for absolutely free. You click a little button and you help out my algorithm. And without any further ado, let's jump right into it. A lot of things are happening. I mean, if you haven't noticed over the course of forever, a lot of really weird things are happening within the world right now, economically. And it's kind of a shift back to where we were before, which is leading to a gargantuan amount of speculation as to where world markets are about to go. During the last 4 years, or even if we go back to 2020, the stimulus packages that we saw, or the money printing that took place, kind of rose the entirety of the economy, but also increased inflation, as we've gone over before. During any time of economic stimulus, if you will, governments printing money and throwing it into the market, the people who benefit the most will be the people who actually own the assets. We've gotten to the point where economic tightening of any kind, of raising interest rates, of not doing excessive money printing to hold up the market. For those of you who haven't been here for multiple other videos, all economies are a mess. It's not just one single country. It's the shaking of the ground typically has to be with the fact that the U.S. economy isn't doing well, and because the U.S. dollar is the world's reserve currency, if that's not doing well, then by golly, everyone else isn't doing well either. So it seems that we have shifted once again, or this is what it appears to a number of analysts, that we are basically back on the course of the 2009, 10, 11, 12, 13, 14 cycle, potentially even, if we can, back to the 2020 cycle, with governments reprinting money and basically lowering interest rates in an effort to try and, in this case, actually restabilize the economies. It's not like even really giving them a boost. It's trying to make sure that they don't actually completely collapse. We started seeing this around 2 years ago, maybe plus years ago, with the Chinese economy. You might remember Evergrande, the real estate company that completely fell apart, and everyone was wondering why. And then people were clutching their pearls when we found out that everything they did was based off of debt. The world runs on debt, and it's a major problem. Nothing is actually real. And I mean, even as far as that fiat currencies aren't real. You can print them at will. They have no actual backing. There is no gold backing. Governments may be collecting gold, but it's because of economic fears and trying to gain some kind of stability within their region, but not actually backing the currency that they're printing about it. So a couple of years ago, with the entire Evergrande thing, that was kind of the when interest rates should have already begun falling and or not raised anymore around the world. China was touted as the next big economic power. But then everyone found out that their largest real estate company, began to falter. And no one really knew why until we figured out once again that the way that it was run is that they were basically creating tons of buildings everywhere, as many homes as possible without any actual demand for them. The idea is that as people reproduce, at some point organically, people would go, oh, those homes are already built, let me go buy them. But they were building so many that they began to basically create ghost cities. If you get a chance, Google China ghost cities or ghost towns. It's places made for 15, 20 million people, and there's no one there. They built entire cities on debt. And then at some point, when people weren't buying these homes that they built out of nowhere, and I mean, it's dozens of them. It's not one city, it's dozens of them, and couldn't pay their money back. It showed how fragile their actual system was. From the outside, as they tend to not share much information about their economy, externally, we would see them building and going, wow, look at how much they're doing. You know, everyone else needs to keep up. And then you realize, oh, they're not doing anything. Like their entire economy is actually pretty bad, along with all their other social issues that they also have going on. So they are prominently in the news today, as are many other places. It says not long after Federal Reserve officials coaxed Bitcoin's price higher with a rate cut in the United States, global markets are now digesting what is reportedly the largest stimulus package from the People's Bank of China since the beginning of 2020. China's central bank unleashed a wave of stimulus measures on Tuesday, described as they say a policy, if you will, bazooka. In the South China Morning Post, these measures include slashing the amounts of funds that banks are required to hold as reserves, and the mortgage rate for existing houses also was cut down by 50 basis points as well. We're seeing a lot of interest rate cuts because interest rates are fairly high. And I mean, historically, we're not as up there as we usually were. If you've seen interest rates back in the 60s and 70s, they were like 25%. I always say the problem is, but there are multiple problems. Housing is typically seen as a number of things. Housing is often seen as a dream, if you will, the American dream. I just watched the video with these people, and it was kind of sad, but this woman was crying, and she was saying that she'll never be able to have the American dream. I think she was in her 40s or 50s, and she was like, I'll never be able to own a home. I'll never be able to so X, Y, and Z. And I sat there like not being cynical, but you have to think sometimes that we were all basically told that there is a dream, that we can achieve all these things. And it was basically to keep us in line and to keep us in order, not tinfoil hat. Like, look at the world now. There are a lot of people I see in videos who complain that they'll never be able to do this or never be able to do that. Like they can't achieve the American dream. And I'm like, there never was one. It was for a very specific group of people who had a large amount of money. And we were all told that we could achieve the entire thing basically to keep us in line. So what's happening now is that people realize that A, they can't afford homes. B, and I mean just from a basis of not even getting a mortgage. I mean, you can't really afford a $750,000 one-bedroom apartment looking over another building. Like there's no actual beautiful view, and even getting a mortgage for it has been also, the idea is quite ridiculous, especially when it costs so much. And even crazier, here's some logic for you. The vast majority of people, like people don't really ever say this out loud, like are at some point unable to actually even pay for their mortgage. A lot of people midway through end up losing their homes. This is something that's often not spoken about. It's because it boosts the economy and it boosts up the banks, and anything else in between simply isn't discussed. So you'll see that people are praised when they actually get a mortgage for 30 years, and some of them are actually going to end up being a lot longer than that. What ends up happening is, especially with this entire like gig economy thing that we have going on, and people having 2, 3, 4 jobs, which is a total like thing right now, is that like the job insecurity is like quite strong. So even you've seen, and we've been talking about over the last year or two, how many times have we spoken about people who have had jobs for 15, 20, 30 years and they lost their jobs because of all the economic policies and troubles that we have going on right now. These people lose their jobs and then they can't pay their mortgage anymore, and then they lose their homes, but you won't hear about it because the initial phase is that it boosts up the economy, and that bank for 10 to 15 years kept on receiving a monthly payment from you, so the bank is doing just fine as well. So one of the ideas by governments is that if they lower interest rates, it'll encourage people to basically take out more debt to get them back into that cycle again, and or that credit card companies might also follow suit and also lower their fees a tiny bit. I did not know. I do not have a credit card and I refuse to get one. I didn't know that some credit cards have like fees of like 8%, 15%, 21% as like a payback. Like it's not worth it in any way, shape, or form. So this is the idea of lowering interest rates for those of you who don't know. It's the idea of like basically incentivizing people to take out more debt, to basically have that monthly drip to go back into the economy. The other part of it is, for those of you who didn't get how terrifying that is the idea of lowering the amount of funds that a bank is actually required to have as a reserve. Do you remember many moons ago when people were going to banks and trying to get their money out, and then people realized that banks don't actually hold as much money as they say? It's because by law, by literal law, they're not required to have a 1-to-1 ratio for what. That's why I thought the scrutiny of Tether and USDC and USDT and all these other coins, I thought was quite funny, because banks are not required in any country, I believe, to hold the exact amount of money that they say that they actually have. So lowering that also only helps the banks. And it always, once again, just goes back to this loop of never actually helping people, but always helping the banks and always trying to help stocks. And then governments wonder why people are discontent. They seem to be completely baffled why in 10 years, like, things are so much worse than they were before. It's because their main priority is always just to help themselves, i.e. rich people. It's never the actual, the People's Bank of China definitely isn't helping the people. China's large-scale embrace of stimulus measures caused many crypto fans to speculate whether the country's money printer was going to go brrr, and if this would ultimately benefit Bitcoin and crypto prices. It's because of the runoff. We've seen this before, and we saw this in 2020 as well. What tends to happen is any type of a loosening of economic policies tends to have a beneficial effect on the stock market. The money from the stock market then tends to either slosh over, that is to say, run off over, into our market, and or organically, a lot of people within crypto making more money, or also, and I dare say, using debt as a means to get into our market. This causes our market to move up. The further our market moves up, the more people get in, and it's kind of like the cycle once again reappears. I will repeat. I know that only some of you are going to listen to this. I will repeat quite strongly. Do everything you can to not get into debt ever. That's A. And also, do not get into debt for crypto. No one knows what this market is going to do. No one knows what the cycle is going to look like. We may have predictions out the hoo-ha for where this market is supposed to be, but I've been here multiple cycles, and I've seen people in crypto, I've seen friends get into debt. And then at some point, they think the market will go higher. The market goes lower, and they end up losing money, and then they have to pay good 20, 30, 40,000 back to the bank. It is not fun. I've seen the devastation that it causes. I know that it seems all happy and fun when prices are going up, but this needs to be said, as I've stated before, because a lot of people keep pretending, okay. Su Tzu, that is SUZHU, who founded the defunct crypto hedge fund 3 Arrows Capital, said on Twitter late Monday that the China stimulus cycle has begun, suggesting that measures enacted by the central bank would be supportive of digital asset prices. So, if you haven't noticed, the idea is basically we are meant to be, and I say that because no one knows anything, we are meant to be more or less in a perfect storm of money for the cryptocurrency market. Banks are currently lowering their interest rates. They're loosening any type of economic tightening that might have happened. A lot of countries around the world are beginning to print money once again, with the interest rates being lowered, debt being cheaper, markets moving up. This is kind of the expectation that we are basically standing in the middle of all these things happening, and that it's going to be beneficial for the cryptocurrency space. It's the general usual idea. Also, as we are in October. And, October, November, December historically have been great months for crypto, that this will basically thrust us. I was going to say lead, but it's meant to like shove us basically into this, once again, $100,000, $150,000, $175,000 Bitcoin. For some reason, this article didn't have it, and I don't know why. Apparently, the amount of money that they're printing is going to be 133 billion US dollars equivalent. It's 8,000 billion yuan, and it comes out to 133 billion US dollars, hoping to revive, kickstart their market because it has been lagging for a while, as have many other economies. That's what the discussion was for a while and still kind of is for the Fed. Like, why didn't you lower interest rates before? Why did you wait so long? What is the problem? Yeah, very fascinating to see what's going on around us nearly at all times right now. That's the China stimulus package news, and tying, I want to say directly, indirectly. Like there's a lot of like world market stuff that's going on. So I will say this, and then we'll continue. I think it's a bit crazy how people can be in charge. Once again, as I am not an economic major, as I am not, what have you, but I find it really weird, the policies that are constantly put in place to make sure that your economy is doing as absolutely bad as possible. We spoke about this a couple of days ago, about Nigeria once again. Because Nigeria seems to be doing, once again, vantage point from my direction. I don't know the country like that. I can't specifically say things, so I can only talk on things about economic policies that I've heard in the news. We had news recently that, at least at the time of me making this video, one of the Binance executives, I believe, is in the country and being held basically because they wanted a bribe of like $4 million and it wasn't given to them. And there's also all these like other weird economic policies that they have going on. I almost feel like over the course of a 3 to 5 year period, economic policies could be put in place to like really like raise a nation's economic status and or make sure that people everywhere have money. But a lot of countries, we've seen it in the news, we've seen it historically, have these policies that kind of make sure that their economies will never recover, that they will always have hyperinflation, that things will always continuously be bad for them. And I mean, even from the vantage point of, imagine a country that has for 50, 60 years, due to also political policies, been in dire economic straits. Imagine you get into power, or rather, if I got into power, mentally, I would contact a number of other countries and say like, hey, we need your help. Not even from debt, like, give me your top economic so-and-sos. How are you doing so well? Switzerland, how are you doing so well? Norway, how are you doing so well? Denmark, please, lend me an ear or a mouth. Talk to me. Like, I need to know something in some sort of way. And then I would make sure to shape my economy in that way. Because most of these countries as well, once again, over the decades, have constantly like swapped their currencies. When they've had like the $500 million like bills, they've like destroyed all those and then like basically like reprinted a new currency and said like, this time we're going to do better. And then it's the same loop over and over. And I couldn't imagine being personally being in charge of a country or even a central bank and literally, not sitting down with like actual economic experts and going, how do we do this right? How much gold do we need? You know what? We actually are thinking of starting a stable coin. Yeah, you know what? We're moving right into the future. We're going to start a stable coin. Tether, how did you do it? We want to make sure that we have a one-to-one backing as well with very, isn't it, think of it this way. Isn't it odd that Coinbase and Tether created a digital version of the US dollar that has lasted longer and is stronger than about 30 world currencies? And I mean, even if you have like the actual, if you see sometimes that the crypto market is volatile, and there's some kind of a fluctuation, if you will, in price, we'll see a 99-cent tether or a $1.01 tether like that. Those are the heavy fluctuations. I'm sure people in any country would rather that than any kind of a, you get what I mean? It's all, anyway, this was also heavily in the news today. The Nigerian naira weakened significantly against the US dollar following the Central Bank of Nigeria's decision to raise higher interest rates for the fifth time this year. The naira dropped to, I don't know what that is. It says NGN 1,658 per dollar on the official foreign exchange market after the bank increased the lending rate by 50 basis points. So remember how the Fed lowered it by 50 basis points? They're raising theirs by 50 basis points. But I'm going to show you the actual number because it's going to mortify you. On a parallel market, the naira hit a low of whatever money per dollar despite the central bank's rate increase. This depreciation occurred even as the 24-hour foreign exchange turnover surged by more than 60% because things look so bad. I mean, the internet exists. I always tell you, use free resources. If you want to learn something, if you want to find out something, the internet is there. It's free for you. The current interest rate in Nigeria is 27.25%. In what way would that ever make sense? You might remember a year or 2 years ago, Turkey was quite heavily in the news. Do you remember why Turkey was heavily in the news? Well, first, there were a massive amount of new Bitcoin wallets in Turkey, and everyone was like, "Why are there what's going on over there?" There were a lot of people, there were a lot of news stories about people who got into Bitcoin. They were swapping from their local currency into Bitcoin, like nearly exclusively, because Bitcoin was less volatile than their local currency. I think, if I remember correctly, the Central Bank of Turkey raised their interest rates, was it to 45 or 50%? Because their economic policies are completely out of whack with actual reality. Remember when we were getting all those news stories about people traveling to Turkey and going to Istanbul and they were buying, remember all the people from Dubai? I showed you the news story. You can Google it and find it. The news story was a lot of people from Dubai were traveling to Turkey. And they were going to Louis Vuitton and to Gucci and Prada, and they were buying and they were asking people online, "Why are you all here?" And they said, because everything here is 80% off, because their currency had collapsed so much. These people were buying, like the women in line were buying bags that were normally $2,000-$3,000. They were buying them for $400-$500 equivalent. All these people going on these like 5-star hotel excursions and stuff like that because it cost them like near pennies, but the people in the actual country couldn't afford their rent anymore. They were talking to people and they were like, "We can't afford tomatoes." They were going to local markets and they couldn't afford the local food. Terrible economic policies for no actual reason. One of the ideas, for those of you who don't know, is that if you basically devalue your currency on purpose, is that you kind of maybe inspire people to do business in your country. If the US dollar is weak, they sometimes do have more economic activity. I know it seems weird, but it's because if the dollar's at 100 of 100, or if it's like 80 of 100, well, 80 is better for the company. We're actually saving money by doing business in the US. Let's give them some of our business. That's usually the idea. But completely running your economy into the ground, it doesn't have the exact same effect. So this was, like I said, this was also in the news, and I saw it, and I sat, and once again, I don't assume that economic policies are the easiest thing to implement. But when you keep getting it wrong over and over, wouldn't you just ask someone for help? Like, there's not that much pride in the world. How many people are in Nigeria who are also going through this? There's not a chance. Do you understand how quickly I would have called the top 10 central banks and said, listen, we need to have a huge discussion right now. Like, you guys need to like help me in some sort of way because we can't go through this again. I simply mentally can't imagine having to go through that. And also tying directly into it as well, if you haven't noticed, once again, the world's economy is not doing well, and everyone is kind of figuring this out, except for people who are raising their interest rates, because that's not how you do it at all. The Swiss National Bank on Thursday took a third step to loosen monetary policy, bringing their interest rate down by 25 basis points down to 1%. Now, I dare say that is probably one of the smartest things, and I mean, it's also Switzerland, so they know how to make money. It's not like I'm going to sit here and like they don't know what they're doing, but I feel like from an actual debt perspective, a lot of people are probably going to be incredibly comfortable with a 1% or a 2% interest rate. I know, of course, people want it to be zero so that there's no, risk involved, what have you, but 1% sounds like where most economies should always be. And I mean, even from the perspective of like actual logic, if you have a 1.5, 2% interest rate, and you as a country simply don't print as much money to cause inflation to go really high, well, we'd probably all be in a much better space than we currently are. The trim, which has been anticipated by 30 out of 32 analysts surveyed in a Reuters poll, marked the central bank's third interest rate reduction of this year. It was the first major Western central bank to reduce interest rates back in March. The third trim comes amid similar signals from the European Central Bank and the US Fed, which took the long-awaited plunge to slim down its interest rate with a 50% basis cut last week. Domestically, Swiss inflation remains subdued, with the latest headline pointing to a 1.1 annual increase in August. Yeah, Switzerland has very strong economic policies all the time. This is why they continue to do well. I mean, also what is it that they have? I think Switzerland has it's not an income. No. I think they have a 0% tax on capital gains, if I remember correctly. I think it's 0% capital gains, and also their what is that thing called when you pass on something? Inheritance tax. Their inheritance tax across Switzerland, I think the lowest is 0 and or 1%, which has, great implications for rich people wanting to move there. To finish it off, where we basically are right now, it looks like we are primed on the right foot to move a lot higher. If you were looking at any of the videos, my videos over the course of the last 2 weeks, you've noticed the trend quite abundantly. The idea is that we should be moving even higher than where we currently are. Everyone seems to be of the same exact mindset, and this is also kind of reinforced by interest rates lowering and money printers being turned back on. So it's a very special time to be in world markets right now. I'm very fascinated to see what's going to happen next. It's nice to still see, as I always say, optimism within the cryptocurrency space. We've had some years where the optimism fell down to zero. So with prices moving and stuff like that, it's nice to see people with a light smile on their face. But it's also, if we can be completely honest with each other, how long have we known each other? If we can be completely honest with each other, I am more than ready for a $500,000 Bitcoin. I'm ready for a $12,000 Ether. I'm ready for Cardano to go to $16. Like, I want to see all these numbers. I want everyone to be like joyous in the market. It's supposed to be basically from now until November 2025. Yeah. I do hope that you have all enjoyed. I do hope you all are having a great day, morning, afternoon, evening, wherever you are, wherever the heck you might be. I do hope it is absolutely fantastic. Thank you all once again for watching, listening, liking, commenting, and supporting. And I will most certainly be talking to you all soon. See you.